Hello, everybody. Just make sure the mic is on. Seems to be working all good. Hope everybody is well and good. Probably one of the biggest trading weeks of the year so far this week, and it's kicked off with a little bit of data today. So I'm going to go over sort of the data that's coming up. Also going to go over a little bit of some of the markets that I'm taking a look at. A couple of markets that I'm already in as well. And yeah, we'll go from there. We'll do the usual stuff, really. There's obviously been a lot of sort of markets being driven by pricing in of certain central banks and things like that. So that's been a big talk over the weekend and into Monday. And obviously, we've just kicked it off with that CPI data. So we'll cover that as well in today's live stream. But as always, guys, if you have any questions or if you have any sort of charts you want to take a look at, please drop it in the chat box. I can see there's a couple of people in here already. So hello, Suba. Hope you're well. Thanks for letting me know the mic's okay. Mayan, hope I said that correct. Hope you're doing well too. Thanks for joining me. I'd like to give it a couple of minutes before we get started. Hi, 912. Spiky on dollar pairs just now. Yeah, we've had that drop of data. If I just bring down the data for this week, because I'm going to have to cover it because there's just so much. We've had the CPI drop here. Came in a little bit above expectations on the CPI month on month at 0.1%. And yeah, we've seen the dollar actually strengthen off the back of that. But we're going to talk a little bit about this in a bit more depth. It might be one of these weeks where we get a lot of back and forth with the markets. You know, we've got a very high impact news week, and to the point of where I can't fit all of it on one page. That usually is a sign of how aggressive the news is going to be this week. Obviously, we're trying to almost cram a few weeks worth of data into this week, because this is usually the last week where we get typical trading volumes ahead of the holiday period. Next week, we often see sort of those lower volumes in the market. And yeah, we often see a little bit of low liquidity and whatnot. And that can often lead to just some range bound markets over the festivities. Yeah, so we're going to go over a few markets of interest. I'm just monitoring an oil position at the moment because I like the idea of being a seller of oil at the moment, and I ended up getting in at 71.66, and price is currently 69.76. So dropping towards those key lows that I'm looking to sort of get out on. So we'll cover that as well a little bit. But if you see me looking down a little bit, I'm just trying to monitor that position as we speak, because it'd be good sort of to manage that position as I go. Expecting a little bit more downside in oil. So I may actually just manage this now. I might just bring my stop down to break it even, close half the position. So that at least we've covered something. Right, okay, so let's kick it off with the news. Obviously, I'd like to just kind of break it down from a fundamental picture first, and then we're going to go over the sort of currency strength meter, as well as some other points that we can kind of draw to going into this week. Hey, Justin, hope you're well, mate. So yeah, US CPI data dropped, and it came in a little bit above those expectations. And we've seen the dollar start to strengthen a little bit. I think what we've got this week is, are the Fed sort of going to play down what the market is pricing in? The market really pricing in the fact that we're going to get cuts next year, and a little bit more aggressively than what we kind of think. And I think with the CPI month on month actually coming in a little bit hotter, we also saw NFP come in a little bit hotter as well. then it might start changing the minds of the market here in terms of, are the Fed going to cut as early as we think, or are the Fed going to hold rates at a higher level for longer? And I think that's what the battle with the market is at the moment. I think if we look at it from the equities point of view, in terms of if you do look at the sort of Dow Jones, the S&P 500, the NASDAQ, you can see that obviously those markets are really booming at the moment. We're seeing price nearly coming back to sort of all-time highs on some of those markets. And that's all down to the fact that they're positioning for those rate cuts, right? And we saw it earlier this year, or it might have been the start of sort of last year, where we had these sort of announcements of sort of rate hikes to come and whatnot, and the stock market fell. Well, we've got the opposite this time. There's talk of rate cuts. The market is rallying again, and that's because it'll be better for business. Businesses can borrow more for less, X, Y, and Z, and that's why we're seeing a bit of a boom in the stock market at the moment. So is that going to continue as well? You know, there's a little bit of positioning play going on there, and it's all going to come down to the Federal Reserve tomorrow. Now, if the Fed come out a little bit more hawkish and talk about holding rates at a higher end for a little bit longer, then we're going to see where the market's positioning at that point, because I don't think that the market is buying into what the Fed are talking about at this current moment in time. And that's why we're seeing a little bit of jostling in positioning going on. Not only do we have the Federal Reserve, though, Thursday is a big day as well. We've got Swiss National Bank, we've got Bank of England, and we've got the ECB coming out with their last rate statements of the year quite a lot recently. And that's due to the fact that the market is pricing in rate cuts. Now, they could go a little bit more aggressively. They might try and sort of put that off a little bit, but we'll see what happens there. Stream is dropping. Hello, Ifran. Anybody else having the effect of that? Might be because the weather's pretty bad by me today, but usually okay. I usually get an icon to let me know that the stream's dropping if it is or not. Let me try. Maybe I should close down a few more windows here. It's better now. Let's see. Might close down another window. But just to let you know, guys, if you are in the Blueberry Markets VIP trading room, I have my own little channel now. So if you come into John's updates, you'll see my analysis in here. You'll see a hard strength meter in there as well that you can come and take a look at. I'll post that every week. I'll also post a little bit of what kind of currency pairs that we're watching here. And I did talk about Euro Kiwi shorts yesterday in and around this area. I ended up taking a Euro Kiwi short and managed to gain sort of 98 pips out of that, which I'll go through over on this live stream. But if you want some more information on what's going on in the news and things like that, then head over to the VIP trading room, John's updates, and yeah, you can type in there as well, ask me a couple of questions and whatnot. So I'm going to close this down. We'll go over to the news, and then I'll bring in the MetaTrader or Trading View. So hopefully that helps kind of support the stream a little bit. Better now? Okay, cool. Just for nothing. Hi, John. How you doing? I'm doing really well, thank you. Hope you are too. Yeah, I was just monitoring a oil position. I took half the position off, so I'm just monitoring that still. Stops are at break even now, though, so we'll see if that one can continue to move a little bit lower. But yeah, like I said, we've got huge data because I think it's going to be a real power struggle. This sort of moves happening, but also giving back of moves as well. And that's all down to the type of data we've got. We then finish the week off with sort of PMI data. We've got data out of China as well, which is going to be interesting considering industrial production year on year expected to actually climb to 5.7%, up from 4.6%. So that's going to be influential as well coming towards the end of the week. But big data points. Like I said, I think the Bank of England will be a little bit more hawkish. Obviously, inflation rate not as sort of not in a place as what we can compare to like the Eurozone and the US. So I think that the Bank of England would actually be a little bit more hawkish, holding rates. I still think it's going to happen. Same with the Swiss National Bank, really. I think they're going to hold interest rates as well. But ECB would be an interesting one. I think the ECB will be something to really look into going into Thursday. But let's go through some of the sort of charts of interest then. So let me just bring down MetaTrader. So really speaking, I was looking at kind of continuing on from last week, really. The currency strength meter was highlighting a few different things. Let me just see. I'll just bring up the actual full currency strength meter here. And then we can take a look at this in a little bit more detail as well. Let's move over a little bit. So a few sort of interesting things coming up on the currency strength meter. Obviously, the dollar is the one in focus for me going into this week. We can see this red line here down at these -6s. We've kind of held at that for a few weeks, and I'm looking to see if this will start to sort of uptick. And if it does, can we start to see dollar strength coming back into the market in the short term? Whether that happens this week, I don't know. Maybe we'll have to wait till after that holiday period to really start to see that dollar come into effect. I like to see a little bit of an uptick first before really kind of diving into it. We haven't really got that yet, but it's on my watch list for those potential reversals. You can see the yen obviously had a brilliant week last week. That sort of strength has continued. I'm still looking at potentially yen longs at the moment. We've got Bank of Japan next week. And, you know, what if they talk about coming out of negative interest rates? I think then the yen could be something to take hold of as well in terms of looking at that strength to continue. From the downside point of view, I can see that the Australian dollar obviously underperforming at the moment. We've got the euro underperforming too. So really speaking for me on the weak side of the strength meter, I'm kind of looking at euro and Oz. And on the strong side of things, I'm looking at sort of yen. One other currency that's pretty strong as well, Kiwi. And I'm kind of looking at whether that US dollar will start to reverse and become a little bit stronger going into this week. So I've really focused on euro yen at the start. Euro Kiwi at the start of the week. I ended up taking a short position on that. I'll go through that in a little minute. And then I like the idea of looking at sort of euro yen short, Aussie yen short, as well as maybe again Aussie Kiwis on here again. I don't trade Aussie Kiwi, but you know, it's on here again. So if you do look at that market, maybe it's something you can look into. And then maybe a couple of those dollar pairs as well, because the dollar is in a little bit of a range bound price action at the moment. So I'll pop that back up there for a second. So yeah, let's kick it off. This is the US dollar index. We can see that we're kind of trading between sort of 104s, 103s at the moment. If I go to a 4-hour time frame, zoom out a little bit. Let me just change the view on the screen so you can see. You can see that price initially came up into this resistance area around about that 104 sort of 25s. We've rejected, come back in. News from the CPI has sort of driven price a little bit higher here. Almost had like price come back towards these swing lows down through here. Before seeing a continuation of a move higher. And then, yeah, so we're starting to see a little bit of positioning now going on in terms of dollar strength and weakness here. This is what I think the week's going to hold for the US dollar. I think if we breach this area here, 104.50, it's going to be a different sort of talking point. Reason being, if you look at the market in terms of sort of volume and things like that, we can see we had strong move down, a little bit of a pullback, strong move again, and then we've obviously continued to sort of then build volume through this area. So we've got a low volume sort of pocket here and a little bit of volume here. So I think if we traded above 104.50, then we try and head back towards this kind of 105 area. But I don't know what's going to happen this week. We don't, you know, I wish we did. We can only make speculations of what's going to happen in terms of what the Fed could do and what they announce are two different things. So, you know, if the Fed are a little bit more hawkish in tone and the market buys into that, then we could see a move above that 104 spot 50. If they don't buy into it, then the market may remain sort of within this kind of consolidation, and a move back towards the sort of 102s could be something on the cards. I just think it's going to be a real tricky week in terms of sort of determining what happens in terms of the US and even with the likes of the ECB, Bank of England and whatnot. From a technical perspective, you know, you could argue that there's maybe like an inverse head and shoulders kind of forming here around that 103 level. Again, I suppose from a technical perspective, you'd still want price to trade above the sort of 104.50 to confirm the pattern anyway. So, you know, I suppose you can still watch price to give you that kind of influence of what's going to happen here. Yeah, like I said, it's going to be a difficult week, to be honest. I'm kind of looking more towards cross pairs. I'm looking more towards commodities to see if there's any kind of action. And one of those markets that I pointed out sort of last week and at the start of this week was Euro Kiwi. So ended up going short Euro Kiwi here last week, profited with about 79 pips. Did the same today, yesterday. Ended up going short at the range high, targeted the range low, ended up pocketing about 95, 96 pips there. And yeah, that's the sort of one of the trades that I've done so far. And again, the market is definitely in a tight trading range here. This is the H1 time frame, and you know, the market is in that sort of you know, range between sort of 1.7650 highs, 1.7475 lows. And because my bias for this market was short, I like the idea of shorting at the highs and taking profits at the lows. And this was a good idea. You know, I think if I held that bias and got really fixated on the bias and ignored the technicals here, you know, I probably would have tried to hold through that level, and, you know, I would have been back above my sort of entry point at that point. So always kind of make sure that your bias matches with the technicals as well. I understand that the market is at a key level of support. We are in a bit of a range, but the market may stay within this kind of range at the moment. So maybe Euro Kiwi still want to look for, you know, we're coming back up into this kind of high here. The only way I would get on any kind of move here is if we have any kind of change of trend on the lower time frame. So if we go to the 15-minute time frame, the reason why I got short in the first place was because we kind of consolidated up at resistance, and then this candlestick breached it here. So I ended up, I actually missed that sort of initial move. So I just put a sell limit order on that close below the 50 MA and ended up getting triggered into here. Stop losses above the swing highs. And then, yeah, price went overnight down towards these targets of those lows. So, yeah, price actually hit the level, started to bounce. So I got out of that position pretty early this morning, which was a good decision in the end because price has started to push higher. So the only way I would get into this market again is if we had that kind of fresh price action to look at. Market comes in, maybe breaches trend, you know, and then it's about looking to identify, is that a strong break and trend, and can we look to kind of get short again? You can see down at the lows here that how price reacts. You get a move up, move in, and then price makes a new higher high, which was quite an aggressive higher high, but you can see then price continues to drive higher at that point. So Euro Kiwi still on my list, but you know I understand that the market is in a place of support at the moment, so I want to see how price reacts when it gets there, if that makes sense. Don't want my tea to go cold, so if anyone has any questions, let me know. Let me know what kind of markets you're in at the minute. Let me just have a quick flick over to, I can see oil's pulled, but oil has moved lower. Okay, so it's hit my TP. Nice. Okay, we can go take a look at oil in a bit as well. Because oil's a big talking point. Oil's a very big talking point. You know, we're not really seeing sort of the market really kind of agree with the sort of OPEC cutting production and whatnot. You know, we're starting to see that sort of downside play out continue. So it's going to be an interesting thing to look at on oil as well. And we're coming into a big level. So I'll be interested to see if there's any kind of continuations from OPEC to kind of consider cutting production costs, as well, try and create that demand again. But the other market I liked as well was natural gas. Natural gas shorts, I think, something to continue to look at as well. I was actually looking at a short in here today, but I ended up not bothering to get into that move because I was already short oil at that point. So I didn't want to kind of, put too much risk on in that kind of term. But you can see I got short here, profited at this sort of extension here, got short here, profited after we gapped down actually on the open on Monday or Sunday. And yeah, we gapped down here, price continued to push lower. So I've had some good natural gas trades recently. And, that would have been another sort of one because we are approaching this big level of support here. And that's where I think price is heading towards. So I do still think that there's still some opportunities here. Even if price does kind of come into this level first, if we get a retracement from there, maybe a pushback into the 50 MA, again, you can see price failing to make new highs. And that was the sort of reasoning why I've been trying to get in recently. I've been just kind of highlighting those highs, seeing how price reacts when it gets to those highs. And that's why I've been getting into this move. But I didn't take that one there just because I was in oil short already. But if price continues to make, or if price fails to make a higher high, then we have to assume that sellers are still active in the market and we could still see a continuation. And natural gas has been a perfect market, really. We looked at the commitment of trader reports. The commitment of traders weren't really showing any buying coming in. We looked at seasonal reports. Seasonals show that it's very bearish through November and December. And then, we just applied technicals as well to that to get a few sort of trading positions in there. And that's done pretty well. If Ryan, I can see your message there. Sorry, I'm currently looking at cable. I might have a go on the short side today. Yeah, I mean, it's a difficult one, isn't it? I like price below 126. I think that we've come into that. Let's actually flick over to cable. Sorry, price below 126 here. I might actually just flick over to TradingView. Sorry, because I know that the writing's a little bit bigger on TradingView, so it's a little bit cleaner, so you can actually see those levels. So yeah, these are the levels I'm looking at. We're below 126 at the moment. I think that's a sort of interesting idea when it comes to being short cable at the moment. I quite like the idea of price coming into that 125 handle as well. Like I said, the market could range between this week. Especially because of two, central bank announcements with the Fed and the Bank of England, obviously. So, yeah, it's going to be an interesting week, I think. We can see that price has obviously spiked into 126 recently and has failed at 126. So there's obviously some kind of selling pressure going on up here. The market felt that, at that 126 price that the sellers wanted to get involved. We kind of breached above that high there as well. So maybe a little bit of a liquidity grab there before trying to continue to the next point of support, which I've got marked in as 1 spot 25. So we're below the 50 MA on the 4-hour chart as well. I like the idea of that when price is below that 50 MA, just from visually, we should be more looking towards that sort of bearish side of things. And price is kind of remaining capped below that at the moment. So whether that stays like that, is going to be something that we need to look into. But, a move down to 125, I think, is something to potentially look at. But it's definitely a tough call this week. It's hard to make predictions, really, considering the news that's coming up. And this could be a month where you don't want to give too much back, right? I don't know. I've had a good couple of months, really. I don't really want to give too much back going into the holiday period. It can be a time where a lot of retail traders try and jump on the markets because usually holiday periods, people have time off, especially the next kind of couple of weeks coming up. I've got, loads of friends that are having sort of 2-3 weeks off over Christmas this year. And, if they were interested in something like this, they would probably be like, yeah, I'm going to use this time to trade the markets. It's probably the worst time to, get too active You know, big funds are going to be away from their desks. They're just going to be focusing on large news events if they could, you know, if they are surprising. And, you know, so it's going to be a difficult couple of weeks. So that being said, you know, I could say shorts below 126, 125 targets look good. That might be a completely different outlook by the end of the week. Okay. And that's the nature of the business, I guess. But if you're saying you like shorts, I'll just make sure you cover risk quickly in these type of market conditions. And I'd probably, yeah, use a sort of appropriate risk. Let's go over to some other charts. Let's actually I'll bring in oil. Has anybody actually had a look at oil recently? Has anyone been sort of trading oil? I'll bring over oil. Where is it? Here we go. Just going to zoom in here. Just put the trade history on. This was the shorts in this area. So ended up just going short here. You know, look at that for a drawdown trade. There's literally zero drawdown on this one. Ended up going short, and the market for full targets were here. Took half the position off. I say I took half the position. I took 2 positions in. Banked the one trade here. Banked the second trade down at these swing lows here as well. And basically, I just like the idea of selling oil rallies. I think it's a good market to look at. Obviously, I might be very late to the move, considering we've been bearish for some time. We came up into this level of resistance at 91.25. I think the last time we looked at oil, actually, if my memory serves me right, we were looking at the fact of going long here, talk about targets this area, and then I'm sure we were looking at maybe longs again from this type of level. I can't really remember back, but that's the last time we looked at oil. And looking at that, that's 1, 2, 3, 4, 5, 6, maybe 7 or 8 weeks ago, considering we were quite active on oil through sort of August, September, October. So yeah, we haven't looked at it for a while, but with the market's definitely sort of playing within that sort of area now, where we've got these lows down here towards the $67, $69 point. I don't see much upside for oil at the minute. I really don't. And if we do sort of break a little bit lower, we may head towards sort of $61 area. That's obviously a big point in the market. You obviously had these kind of highs that formed here, sort of pre-COVID, I guess. And we had that sort of COVID move down in March and April of 2020. It was also a bit of a sticking point for price when we kind of breached back above that area, held as support. So maybe we're going to kind of head back towards that level there for oil. Just don't see much upside at the minute. I think OPEC have got to do something really drastic to try and stop this kind of falling knife, essentially. Code it, welcome, hope you're doing well. Head and shoulders from 78, broke HNS line around 85, and then broke HNS around 86. Yeah, you're looking at this, I guess, as a head and shoulders, maybe, with that sort of ascending neckline. So it came up into that level of resistance there. You're looking at the head and shoulders and a move down. You know, I think this is a good area to target. You know, like I said, I'm a bit late to the move, to be honest. I have done a little bit of analysis over on the trading room of oil back up this area here, around about $79. You know, I thought that maybe this would be a point where price struggled at. I think if you wanted to be long oil, price needed to breach this area and move higher. Didn't necessarily think that would have happened, and then prices continued down. So unfortunately, I've missed that sort of whole move there and caught this sort of last minute little bit of an area there. But that's because I was focusing elsewhere as well. Natural gas was a good one to look at for those shorts. Target 67.68. Okay, yeah, you're looking towards down in these areas as well. I do think, like I said, I think oil's probably got a little bit more room to go, especially if you look at these kind of lows here. I think, you know, let's have a little look at where those kind of stand. Round about 67.44, so I'll probably round that up to 67.50, and that would be, I think, a good area to target for any kind of oil shorts at the moment. I just think any kind of rallies are going to be met by sellers at the moment, and if you actually look at the price action, even if you looked at it from that daily picture and you saw buying coming back in, there's not aggressive buying coming back in, is there? It's very sort of shallow sort of pullback. And, you know, yesterday is almost why I was looking at this, because look at the sort of close on yesterday. I thought the close yesterday reminded me of a sort of continuation move. Like I said, I like the idea of being short oil. I went on the hourly today and I saw that price kind of failed at this previous swing high, so I ended up taking position short in here and just targeting these swing lows. So although I haven't taken many trades this week, they've all done pretty well. Euro, Kiwi, short, gas over from last week did pretty well, natural gas, and obviously oil. So I'm hoping that's it for me this week, if I'm honest, because I don't really want to get involved with too much of the sort of news events or the risk events around, because I think it's going to be quite difficult to call where the market could move towards. Code it, please do dollar yen and dollar CAD yet. Oh, let's go over to those. Ifran as well, send you a message there. John, what are your thoughts on the S&P prices currently rejecting a key level? Yeah, the S&P is a really interesting market. So let me just see that tee off before it gets too cold. There we go. We can see cable starting to move lower a bit. Let's go over to dollar yen then. So dollar yen, really interesting market. I like yen strength. Do I like trading dollar yen? You know, on the fence on that one, because dollar for me is a currency that I'm anticipating a little bit of strength to come in on, whereas yen as well is a strong currency at the moment. Now, this is the 4-hour time frame on dollar yen, and I've got some levels of interest. You can see here around about this sort of 146 spot 66 area is a level of interest for me. The reason being is because the market has moved, we've kind of consolidated, broken to the downside. So I was kind of expecting the market to come and test that area and then see if sellers get involved. Now, we have seen some selling pressure. We can see the market came in to this point, and we did start to see a little bit of a sell-off. If I just zoom right in, you can see here we've had that sell-off. The market has found some sellers. Now, we came down into 145. We've rejected 145. We're starting to push back to the upside here. I think if I was interested in anything dollar yen, I want to see how price reacts to this zone again. If price comes back in, again, if you go to those lower time frames and you see a change of trend, then there might be an opportunity, because I do like that yen strength coming into the market. But would I necessarily trade dollar yen? I always kind of give a little flick back over to the currency strength meter. And I know this is just something that I do personally, but when we are in this kind of reversal zone, that, you know, it can make a potential move higher. So it's a tricky one. I would rather trade currencies that are getting weaker against the yen. I can see Aussie, Euro, for instance, getting weaker. And that to me just means that there might be some sort of better trading opportunities around that point. But, you know, if dollar yen does get up into that sort of 146.50 again, rejects it, if you go down to the likes of your sort of 15-minute time frame, let me just take all this stuff off. Sorry, I'm just looking at volume profiles and stuff there. You can see here, look, this is the 15-minute. What happens? Price gets into that level. We consolidate here. We then kind of form a support base. That base gets taken. That triggers sort of sell positions into the market, and the market moves down to the next level of support. You've got to look for a similar pattern again. The market coming into a resistance level, it's slowing down. You know, it tries to breach, you know, fails at that point. Probably look at some kind of stochastic divergence or something at that point as well. But I'll need to see price slow down. If price slows down into this level again, changes trend, then, you know, you're onto something really. You can see as well, this is a nice breach below that 50 moving average, and prices continue down. So that's the way I'd look at dollar yen at the moment. I'd be eyeing up this 4-hour time frame. I'd be eyeing up that kind of swing level up here. If price fails to make a new high, that's when I'll be interested in a bit of dollar yen. But like I said, I think the better market to trade is more like your Aussie yen and potentially Euro yen. Aussie yen actually wouldn't be a bad shout, considering we've only got employment data coming out of Australia this week. We haven't got any kind of RBA sort of announcements or anything like that. So from sort of a avoiding the central bank data kind of view, you've got Aussie yen. That could be something to look for, okay? And if I just quickly go over Aussie yen before I move over to dollar CAD for you, code it, we can see that we found support down here towards that 94 area. We've rebounded. We've come up into these swing lows around about that 96. Starting to see that bearishness come in a little bit today. Again, I'm eyeing up this 4-hour time frame. I'm going to look to see how the 4-hour reacts, if it can push back into this sort of zone up here. If we then start to see reactions here, then we could expect maybe a play for price to try and come down towards these lows. I'd definitely be taking some positioning off here. We can see some strong buying has come in at that point. So that's one thing I'll be looking at on Aussie yen. Like I said, you could look at Euro yen as well with the central bank data this week. Then Aussie yen's a good market to kind of do that in. I can see, look, we broke. I nearly took a short on this today. I'm not going to lie. We broke back below the 50 MA on the hourly chart, and I thought this could be a good area to kind of get into some positions. But I'm just going to hold on. I'm going to wait a little bit. I'll see if price can kind of come back towards this sort of area here, and if it can, I'll then again watch that price action. How does it react? You know, go down to that 15-minute time frame. Do you get any kind of changes in trend or anything like that? You can see here, market comes in. We're in an upward trend still. Okay, this is the sort of first signal here. Get a bit of a failed high. The market comes in, and then you can see we just start taking out these lows. That shows you that sellers are starting to kind of get back into the market. And yeah, the market has started to roll over a little bit. So I'll see if we can get a pullback, maybe towards 95.80, back up towards that 96. And then if we do get any kind of opportunities, I might have a little look at some Aussie yen to the downside here. Because like I said, we've only really got employment data coming up. Let's have a quick look in here. And that's Thursday. So you can see the employment change. It's actually looking to come in a little bit lower, forecasted down from 55k to 10.2k. Unemployment rate forecast to rise to 3.8%. So that kind of plays into the potential for that Australian dollar weakness to come into the market, you know, if that makes sense anyway. So yeah, Aussie yen definitely on the one to watch. Let's flick over to dollar CAD. Obviously dollar CAD could be an interesting market if you're looking at the play of sort of oil. We have seen sort of dollar CAD sort of trend lower. We do have sort of, if you are a head and shoulders trader, code it, you've mentioned a couple there. There is a sort of left shoulder, head, right shoulder situation going on. Price finding support at 135.50. Break above 136, I think, will be what kind of drives this market to the upside on dollar CAD. But look at it on a sort of, let's have a look at the weekly chart. Weekly closed bullish last week. You know, I'm a big believer in kind of looking at that weekly time frame, and I can see that we've come into these weekly lows at 134.75. The last time we kind of taught dollar CAD was short 138.50, and I think we looked at sort of, you know, taking some positions off on the way down. But 135 or 134.75 is those kind of previous lows. Yeah, I think maybe if we breach 136, you could probably see a little bit of upside in this particular market. Again, it's all going to depend on sort of the dollar. You know, I would say for me personally, I wouldn't necessarily want to do anything unless we were above 136 on dollar CAD. But I can see why it would be appealing. You know, we've got aggressive buying coming in here. Price has almost come to sort of test where that aggressive buying has been, and we're starting to see some buying coming back in. Dollar's obviously strengthened on the data today, so you know it does make sense to look at that CAD weakness really, especially what's happening in sort of oil markets. as well. Ifran, yeah, interested to get your take on the S&P. Let's go over to the S&P. Actually, we're actually at a very big level of resistance, like you said. If we go onto the weekly chart, that level is this high here. So this is where I was talking about. It's actually, yeah, it was last year, 2022. January 2022 is when we had the Fed talking up rate hikes, and then we went through that rate hike cycle. The market moved to the downside here. Only lasted really till sort of October 2022, and then we've kind of been recovering since. That's because the data started to reflect what was going on, really, and then we started to see a little bit of a rebound. Now, if you remember rightly, 41.27 was actually an area where we were looking to see buyers come back in to the market. Unfortunately, I didn't take anything here, but we looked at the volume profile at this point. So let's grab volume profile. We went from this. Oh, actually, we didn't go from there. We went from this swing low to that swing high. Looked at the impulse phase, and we pointed out this strong area of volume at this point, and basically said, you know, this could be a good area for those buyers to get long again. Reason being is because obviously we've rallied, consolidated, created large volume here. The market's then rallied. So what that tells me is at this point, buyers won. Okay, so the buyers were stronger, and that's why price continued higher. Didn't see fair value there anymore and push price to the upside. We've now come back to that point, rallied again. Now, we've had 6 straight weeks of bullishness. 1, 2, 3, 4, 5, 6, actually 7 straight weeks of bullishness. Obviously, I'm including that one there, though. So 6 weeks of bullishness confirmed. I would say that's a little bit overbought now from a technical position. It'd just be interesting to see how the market reacts to the Fed data this week, because obviously highs are still at 47.79, and rate cuts would be a positive thing for the market. Now, if they kind of play it down a little bit, talk about, no, we're not going to sort of go as aggressive of what the market's pricing in, because that's what basically this move is the market pricing in those cuts to come as inflation has fallen, and that's why we're seeing this big move. We are at a major level of resistance, though. The high that formed back on the 28th of March 2022 formed that high there around about 46.36. We've kind of tapped into that level and rejected it. So I think this is going to play big into sort of what's happening in the Fed this week. Not only that as well, we do have services PMI, manufacturing PMI, and retail sales after the FOMC press conference, which I think could also play a big part in what happens next. If obviously we have positive retail sales data, then the S&P 500 could continue to sort of drive up back to those highs that formed back in December of 2021. So, yeah, I mean, I like the idea of seeing a rejection here. It's just, do we try and jump onto that in a week like we have? You know, I think if this was any other sort of normal trading week, I would be happily going, yeah, this could be a good rejection from a technical perspective. You know, I can see on the 4 hour, we're getting that sort of rejection in here now. You know, maybe they've priced it into the point of they're happy to see, you know, price break to the downside. I think confirmations of that, if we're looking at it from a 4 hour point of view, we've got that sort of shelf here, haven't we? We can kind of be cautious with our 4 hour outlook. You know, I can see that we've got consolidation there. So a breach of 45.40, you know, would kind of lead down to, so if I just duplicate that up, let's just copy that up, clone that up. So first of all, I think a breach of 45.40 could lead to 44.87. A breach of that, and I think definitely we're coming a lot lower. Just risk-wise at the moment, is it? I can see strong sellings obviously coming here. That's data-driven. You know, is it going to be as simple as looking at that level and getting short there? I don't know. It's a tough one to call. Like I said, I don't really like big news weeks, I usually in these type of market conditions look to safe havens. So that's why I'm more focusing on that sort of yen strength coming into the market this week. So yeah, for me, I would prefer to go, like I said, over to sort of like Aussie yen and look at sort of doing some business over there rather than looking into the stock market. But it is a very interesting sort of proposition here. We've got a very good level of resistance, and the one thing that you've got on your side is risk management, right? If you feel like there's a good opportunity here, then at least you can manage risk. You don't want to set your expectations too high, even if it's just 1% and you miss out and price moves higher and you get knocked out for 1%. It's still only 1% at the end of the day. So I don't feel like there's a problem looking at this level at all. For me personally, I just don't want to put my marker on anything too yet, because if we breach and hit this level, then that's going to be a big talking point. And I think we'd probably see some kind of rejection of the highs there. But we'll see. It's an interesting dynamic, isn't it? We've got an interesting week coming up, really. Yeah, it's an exciting one to just kind of witness. But like I said, I think after today, we've got pound GDP in the morning. That's expected to fall. So I can kind of see cable being a good market to look at. But 1:30 p.m. onwards tomorrow is going to be a very, very interesting ride for the rest of the week. And then obviously going into next week, we've got those lower sort of volumes and whatnot. And it's going to be a tricky one. Hopefully that makes sense, guys. Let's just flick back over to cable. I can see we're kind of dropping down towards that 125.20 area, back towards that 125. I think this is a good level to sort of target, 125. I do like Aussie shorts, right? I really do like Aussie shorts at the moment. From a sort of point of view, you come back up into that kind of weekly chart. Weekly close last week was bearish. We've kind of rejected in and around that 66.50 area. So I do quite like the Australian dollar moving lower. Again, it's what you pick it out against. I think if you're looking at a stronger currency, then the Japanese yen is definitely one to take a hold of. I did like the idea of Aussie Kiwi shorts. It's not a market that I trade, but the currency strength meter is saying that we should be looking at that potentially. Although that 4-hour price action there doesn't look very bearish at all. So yeah, not really a market I can really give too much on, because I don't really trade it all that often. So, or if ever. So yeah, it's not really a market I can comment too much on. CAD's obviously having a poor time as well. I think that's reflecting now from that sort of oil markets, but it's not really a market that I've had a look at in a while, CAD, to be fair. Like I said, I like oil downside, gas downside. Gold is an interesting play at the minute. I actually thought that there could be some more upside to gold, and we are approaching this 1980 level now. Dependent on what happens, though, because if obviously the dollar strengthens, then gold runs a risk of moving down towards 1938. Quite like this 2018 area. If price was to kind of climb back up to 2018, it could see a little bit more downside. My thing with gold was the community of traders was showing that there wasn't really aggressive selling coming in, so it made me think that there could still be some upside to gold. But that 2075 level proved to be quite a big sort of substantial sort of short. I guess it's the fake out of these highs, isn't it? Really. Looking at that, it makes sense to see your price come back towards 1938. Let's have a quick flick over to Bitcoin, actually. Starting to get a little bit interested in this market in terms of maybe a bearish move. Reason being is we're heading towards this kind of swing high, these highs that formed back in March of 2022, around about that 46k area. I've got alerts set here. I'm actually watching this one. So if the price was to kind of make it towards 46k, I'm going to watch to see, do we get some kind of technical setup here for a little bit of downside. But a lot of positivity, obviously, with Bitcoin recently and sort of the cryptocurrency space. And we're starting to see a lot of bullishness coming out of the cryptos at the moment. It's not a market I've stayed in touch with, to be honest, but it has come to my attention because I was just having a little flick over and I saw that we had a strong break of that 32, 37 sort of area, 32, 33,000, I guess, area. And we've just kind of climbed ever since. So we shall see there. I think one market or a couple of markets you should keep your eyes on are the bond markets, 10-year yields, 2-year yields as well. 10-year come down into this 4.1%. You know, if we see any kind of bullishness in the 10 years, then I think that's going to be reflected in the dollar as well. So we'll probably see some dollar strength. Same as well, really, with the 2-year, we can see prices come into sort of 4.6%. See any kind of rallies here. Last week it was bullish. Starting to see a bit of bullishness here as well after that data. If that continues, then I'd be looking at the dollar to continue to get stronger as well. So, yeah, I'm going to leave it there. It looks like oil has actually gone. Oh, I thought it had gone further there, but it hasn't. Let's have a quick flick back over. Just around those take profit areas. But like I said, it's going to be a very, very interesting trading week. If you are in the VIP trading room with Blueberry Markets, then you can head over to my channel, John's Updates, and I can chat to you there and give you some updates on what I'm looking at the moment. But if there's no more questions, I think I'm going to leave it there, guys. We've run for nearly an hour now, so we've had a good long chat about the markets. What I would say is be safe this week. You know, trading is a long game. It's not a short-term money grabber, you know, as some may suggest it is. You know, it's a long game, and you know, protect that capital and go into the new year with some fresh outlooks and you know, ready to hit it in the new year, right? Back again on Thursday. We'll kind of have a little look at how the market's played out with regards to the US data on Thursday. So join me then at 2 p.m. GMT. And yeah, thank you for everyone that joined me today. So thank you, Vincent. Thanks for joining. Ifran, Code It, Just Nothing, 912, Justin. Thank you very much. Mian, Suba. Thank you for all your comments and questions. And if you're new here, smash that subscribe button. And yeah, let's try and reach that 10K goal. So thank you. Thanks for joining me, guys. Enjoy the rest of your trading week. I'll catch you on Thursday.